if you look at where the economic data has been coming in during the second quarter of 2025, it's been mostly disappointing. And that disappointment has actually been accelerating over the last couple of weeks, even the last few days. This graph is through this morning's poor new home sales data. Almost all the economic data that we're seeing coming out of the US is falling short of expectations. That doesn't mean we're in recessionary levels. It just means that the economic data is not coming in as well as we expected and as the consensus expected. And there's two ways for this to resolve. We can either see expectations fall, or we can see the economic data start to turn better. Expectations have already fallen. One reason why you haven't seen a bounce back in economic forecasts, the same way you've seen a bounce back in equity markets, is that the preponderance of the data continues to come in below expectations. This is a very different story than we've seen in the last 2 calendar years. In both 23 and 24, as we pointed out coming into the year, expectations were pretty soft to start those years and were revised up during the calendar months because the data came in better than expected, especially the consumer data. That has not happened in 2025. We came into the year with very high expectations, especially as they were being revised up in the fourth quarter, and those expectations have fallen significantly to the point where we're now expecting, consensus is expecting 1.4% GDP growth for the year for the US. That would mean that we're annualizing at about 1.6% in the first half of the year. That would mean somewhat weaker growth in the second half of the year, though not catastrophic recession level growth.